Morning, all of you.
Good morning, ma'am.
Good morning. Are you all ready with your book, calculator, pen, question? Do you all? Are you all ready or not?
Ready, ma'am.
Very good. So shall we start?
Yes, ma'am.
On screen here. Today we are going to discuss about admission of a partner. Question from our yes. This is the question from your textbook, page 163, Advanced Accounting textbook of BRAO study material. Please keep open your books. The question is given. Akash, Dinesh, Modi sharing profits and losses in 4:3:2 ratio, and their balance sheet was on 31st March 2018 was as they have been provided creditors, capitals of all the three, cash, debtors, stock, machinery, and buildings. This is the total of balance sheet. Okay. Yes. Anyway, now looking into the this is retirement sum, huh? Oh, 1 second, children. I didn't read advance account. Just a moment. Admission. This is retirement sum. I would like to make you practice admission sum one more. 190. I'm so sorry. Okay, I'm sorry. Take the page number 147, question 4. Page 147, question 4. Nadi. Page 147, question 4. I'll just Oh, my mute. I'm so sorry. I thought I unmuted. Yeah. Look at this question. Radha and Ramani are partners. Their profit sharing ratio is not given. That means we should share equally. And their capitals, reserve fund, creditors, expenses payable are given. Cash at banks, 100 as Cash at banks, 100 as stock, furniture, machinery has been given in the balance sheet. Additional information, they said they admitted Rajni into the partnership and provision for doubtful debts to be created 6,000. Investments not appearing in the books amounted to 8,000. That means increase of asset. Furniture to be depreciated 8,000, decrease of asset. And Rajini has to bring 20,000 towards capital and 20,000 towards goodwill, which is to be withdrawn by old partners. And you are asked to prepare journal entries. Okay, journal entries, ledger accounts, and balance sheet. So let us start this. Uh, so advance account, administration of a partner, page number 147, question number 4. We are review study material. Okay. Now working notes solution. So first we need to take the information. Who are the partners? Radha and Ramani. Okay. What is their profit sharing ratio? Nothing is given means 1:1. They are sharing equally. Okay. If nothing is given, they are sharing equally. Radha Ramani's profit sharing ratio 1:1. And admitted Rajni. Rajni, new partner. Her share also not given. So her share is also 1. Means new ratio of Radha, Ramani, and Rajani. If nothing is given, equally they are sharing. Provisions of Partnership Act. When profit sharing ratio is not given, partners share equally. So 1:1. This is their new ratio. So sacrificing ratio automatically 1:1. Okay. Sacrificing ratio of who is sacrificing Radha and Ramani with the admission of Rajini equals to 1:1. Right now, this is our what do you call working notes. And next relating to the Rajini's capital. Rajini is the new one. Rajini capital. How much amount of capital she bought? 20,000 rupees. 20,000, right? And she also brought goodwill. Goodwill, how much she brought? Goodwill of 20,000. Right? Now we need to pass journal entries. So let us see journal entries on admission of Rajini. So Rajini brought bank account data. How much total she brought? 40,000. To Rajini capital account, she brought capital 20,000 and she brought goodwill. Rajini goodwill account 20,000. Right? So he asked second one, this goodwill debtor 20,000 shared by Radha and Ramani in equal ratio, because sacrificing ratio is in sacrificing ratio. Okay, to Radha capital account 20,000, to Ramani capital. Sorry, Radha is taking 10,000, Ramani is taking 10,000. Okay. Equally taking the share. Write down the narration. Goodwill shared by old partners in sacrificing ratio. Understood? That you are supposed to write down. Okay. Okay. Now, after this, what did he said in the last sentence within the brackets? Which is to be withdrawn by old partners. So they are withdrawing. Okay. So what we'll write again? Radha capital account that are 10,000. Both has withdrawn. Ramani capital account that are 10,000 to bank account 20,000. They withdrawn. Okay, to bank account 20,000. Goodwill withdrawn by partners. Okay, that's all done. So we pass the journal entries, and we also given the narration. These are important, right? Now, next, after these entries, let us start. What is our next step? We distributed goodwill. We passed an entry for getting capital and goodwill into the business by Rajni, and we also distributed the goodwill. And as mentioned, goodwill is withdrawn by the partners. We also passed it. Now, next entry is for next step is revaluation account. Right? Preparation of revaluation account. So in revaluation account, what we do? Adjustments relating to the assets and liabilities are to be shown. Okay. Now, what are the adjustments given? Provision for doubtful debts has to be created. Provision for doubtful debts has to be created. So that means on debtors provision you are creating for doubtful debts means doubtful amount. So 6,000 is going to be your doubtful amount of debtors, which is a decrease in your debtors. So RBD or PBD, provision for doubtful debts. What is the amount he said to create? 6,000. Decrease in the assets, decrease in the liabilities. Okay. I'll show you here. You should remember this is the sign again. Now, what is that? Increase of liabilities. From the previous one, I'll take. Okay. 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 So here. Wait. I'll show you. Increase of liabilities. You're supposed to take here. In previous class, I already showed you that. I'll take copy paste from there. Yes. Yes. The thing you are supposed to remember while preparing revaluation account. Okay, so now let us see the question. First one is provision for doubtful debts. Provision for doubtful debts means decreases the debtor's value, so we have taken it on the debit side. The second next adjustment is that investments not appearing in the investments not appearing in one second. Books. So investments are not appearing in the books amounted to 8,000. That means increase of assets. Increase of assets. So as assets are increased, we should take it on the credit side. Investments. How much? 8,000. Okay. The next, furniture to be depreciated. That is decrease in the assets. So furniture depreciation on furniture. So how much? He said 8,000. Directly amount he gave instead of percentage 8,000. The next, that's all. Only three adjustments relating to assets and liabilities. Okay, now find. So these investments, credit side is 8,000 and debit side is 14,000. Right? So what we do? Investments 14,000 in the sense debit is more than the credit. So you are supposed to, that is loss. Whether it is a loss or a profit will transfer to the partners capital account. So partners capital account. And who are the partners we have? For the partners, two partners are there, Radha and Ramani, old partners, Radha and Ramani. Okay, so Radha's capital, Radha 10,000 equal, sorry, not 10,000. What is the difference amount? 6,000. So Radha 3,000 and Ramani 3,000. Total 6,000 will show as a loss. Will show as a loss. The total of revaluation account is 14,000. Right? Over. So the revaluation account is over. Now you are supposed to open partners capital accounts. Okay, partners capital account. Now let us open partners capital account. So are you all doing? I want to hear from you. Not 30,000, 3,000. My voice is not coming out. It's my mic is on only. Partners capital account. So open the table. Insert the table. We need two partners. So 6 columns we need to open. Right. This is the debit column and this is the credit column. Right. So first column is Radha, then Ramani. No, we need to open for she also. No, Rajini. Rajini also we are supposed to show. Third column. Radha, Ramani, Rajani. Right? Now, particulars. Take the particulars. First, what we are supposed to do when you open the partner's capital from the question balance sheet, you are supposed to take the partner's capital. So, what you will write for that? Balance brought down. Balance brought down. So, Raja's capital 30,000 and Ramani's capital 20,000. Okay, and for Rajani, you are supposed to write bank. Bank Rajani brought total 40,000, 20,000 capital and 20,000 goodwill. Right. Next, from the question balance sheet, whatever comes that we are supposed to take it. The next one is reserve fund. Look at the question balance sheet, reserve fund, which is an accumulated profit to be distributed to the old partners. So reserve fund, Radha and Rajni equally because no profit sharing ratio given to us. Only Radha and Rajni. Okay. Sorry, Radha and Ramani. The next one is from the question balance sheet, nothing else. From additional information, Rajani, we took a bank 40,000. Now from revaluation account. Revaluation account, whatever is here, there's the partner's capital is showing now on credit side. So that will come on the debit side. Okay. From the partner's capital, whatever is showing, that will come on debit side by writing from where you are taking revaluation account. Revaluation, Radha 3,000, Ramani 3,000, Rajani will not get anything. After that, we also passed a journal entry that Radha and Ramani withdrawn capital and they also has taken withdrawn goodwill and they also have taken goodwill. So for taking the goodwill, we should write here from whom they taken. They took Rajani. Rajani's capital account. So 10,000 each of them has taken the goodwill from Rajani. Okay. And in Rajani's, we write Radha's capital, Radha and Ramani capital account. Total Rajani's goodwill 20,000 taken by the Radha and Ramani. Now they withdrew. Who Radha Ramani withdraw the capital. What did withdraw the goodwill? What we have written for that? Bank account. Bank account 10,000. 10,000. Right? Now the balance. That's all the transactions from question balance sheet, revaluation account, and working notes you are taken. So now finding the balance carried down. So find the totals of capital balances of the partners. Right? See, Radha's total, let us start with the Radha from credit side. Radha's total is 30,000 plus 10,000 plus 4, 44,000. So Radha's credit total is 44,000. Debit total is 13,000. So 44,000 minus 13,000 is how much? 33,000, right? The difference. Now Ramani's capital 20 plus 10 plus 4, 34,000, right? So 34,000, and Ramani's debit total is 13,000. That means Ramani's balance carried down is 23,000. And if you look into the Rajni's balance sheet, sorry, Rajni's total, credit total 40,000, and from which 20,000 given to Radha Ramani. So her capital balance, final capital balance is 20,000, right? So these are the figures which we calculated, right? Okay. So shall we move on to preparation of bank account? Now we are supposed to prepare a bank account, not a balance sheet. Okay, bank balance has been changed with the Rajani's admission. So let us open bank account. Okay, I'll open the bank account. Are you all following? Yes. Thank you. Reserve fund means the amount, certain profit is kept aside. Certain amount of profit kept aside to meet the future financial requirements of the short-term financial requirements of the firm. So, which is a part of a profit kept aside by the firm. Okay, to meet the financial requirements. As a new partner is arriving, so they want to distribute among themselves, within themselves. Okay, that is why it is called as an accumulated profit. Yeah. Others, please complete if you have knowledge. This left hand side is debit, right hand side is credit. Okay. Now bank account. The bank account shows a asset. So it shows debit balance. So from the question balance sheet, whatever the balance under bank is given, that has to be taken. This is from question balance sheet. In question balance sheet, cash at bank given how much? 10,000. So we are taking that from the question balance sheet. So we are supposed to write it as a balance brought down. After that, in the form of C's capital, C not that is Rajani. Rajani capital. She brought 20,000, and Rajani goodwill 20,000 came into business. Okay, came into business. Then this Radha and Ramani withdrew the capital that amount. So Radha capital. Radha withdrew 10,000, and Ramani withdrew 10,000. So final bank balance is how much at the end? It's 30,000. Okay. Okay. Bank balance is 30,000. Alright. Done. Okay. So this whatever you got, this bank balance you are supposed to show in the balance sheet. This is the balance which you are going to show in the balance sheet. These are the totals. Total of the balance. Now we can open the balance sheet. Okay. Uh, Balance sheet. Dates were not given. So you should put new balance sheet. New balance sheet after admission of revenue. Okay. As long as dates are not given. Now open a table. To balance sheet, we need 4 columns. So balance sheet, these are liabilities. Asset. Okay. Yes. Let us start with the assets. See, Radha Ramani capital. Do we take this? Radha Ramani capital given in the question balance, do we take as it is? Anyone please? Radha Ramani capital. What amounts we take? No, very good. We don't take. Then what values we take? What values we take? Radha capital. What value we take? From the capital balance. Radha capital showing how much? 33,000. Very good. 33,000. Then Ramani capital. What is the Ramani's capital account showing? 23,000. Very good. Very good. Then here, one new person is also adding. Who is that? New partner? Rajani. So, Rajani capital. What is the Rajani capital? Can someone please? Very good. 20,000. Rajani actual capital what is 20,000 only. Right. Very good. The next from the question balance sheet. Reserve fund. Do we take reserve fund in the new balance sheet? Do we take reserve fund in the new balance sheet? No. Very good. Because we took it already in the capital accounts. So will not come again. Creditors. Yes. Creditors, do we take it? Yes. There is no adjustment relating to the creditors, so we should not leave. If nothing is given, we take as it is. So relating to creditors, nothing is given, so we take as it is as given in the question balance sheet, 35,000. The next, expenses payable. That also we don't have anything, so we take as is. Expenses payable. What is the amount? 5,000. Done? Done with the liabilities part. Now coming to the assets part. Assets, first item is cash at bank. What is the cash at bank balance we take? What is the cash at bank balance we take? Do we take 10,000? Do we take 10,000 cash at bank? No, we should take from the account. New balance, whatever we got. That's very good. 30,000. Right? Next one is sundry debtors. Sundry debtors. What is the amount of sundry debtors? 32,000. Do we take as it is 32,000? No. Very good. So you are supposed to subtract PBD, which is given on the realization account. Revaluation account. Which side you are showing PBD, provision for doubtful debts? Debit side. Debit side means from the asset you are supposed to subtract. So debit side you are showing, so you are supposed to subtract from the asset value. The revaluation amount you are supposed to subtract from the asset value. So what is that? Yeah. So 32 minus 6,000 means 26,000. Very good. Next, what is the next item given? Stock. Do we have any additional information relating to stock? Nothing. So we take as it is. Next, furniture. Do we have furniture adjustment? Yes, we have furniture adjustment, right? So what is that? Which side relating to furniture adjustment? Which side you are showing in the revaluation account? Debit side. So we are supposed to subtract it. from the furniture as a depreciation. What is the depreciation on furniture? Given in the question only. So 8,000. So 11,000 minus 8,000 is 3,000. Right? So what is the next item? Plant and machinery. Do we have any adjustment? No. So we take as it is. What is the value of plant and machinery given? 20,000. So from the question balance sheet, every item has been taken. Now look at the additional information. Additional information, you have been provided with the furniture with provision for doubtful debts. We took investments. No, we didn't take investment. So in revaluation account, where do you take in the investments? You are taking investments on credit side. Credit side means you should add to the existing asset. If it is a new asset, we should take it directly. So investments to be taken. Increase. Investments not recorded. Investments not recorded. How much? 8,000. Right. So next furniture. Furniture adjustment we took. Relating to next last one is relating to the new partner. We took everything. So now that means from the question balance sheet we took, from the additional information whatever comes we took, and capital changes we took, and from revaluation account whatever to be taken in the assets, that all adjustments are done. Now do the total of balance sheet. So one of you do total and let me know. $33,000 plus 23,000 plus 20,000 plus 35,000 plus 5,000. What is the total? 1,16,000. Very good. 1,16,000 is the total of liabilities. Then are you getting the same total on assets? 30,000 plus 26,000 plus 25,000 plus 3,000 plus 20,000 plus 8,000. One lakh 12,000 you're getting. Assets you're getting 1,12,000. So 4,000 difference we are getting. Assets total is 1,12,000. Where the 4,000 gone? You're taken. Look at the total 50, 85, 90, 98, 42, 67, 87, 98. Total is same. Where did we go wrong? Rajini's capital 23,500 is a loss 1,000. Balance sheet 1,17,000. Radha's capital 33,500, 500. Okay, I think he took it on the basis of capital contribution. The share of the partners, he took it on the basis of capital contribution. 30,000 is to 20,000. But actually, children, when no profit sharing ratio is not given, profits has to be distributed on the basis of equally among the partners. So 4,000 difference. Okay. What's the time? Some more 15 minutes we have. So we can do it now. Changing this, I'll tell you. This revaluation from here it comes. No, here also. If it is on the basis of capital. Wait. You are not getting. Yeah, I see here. I'm changing it again. So let us, as we are not getting the balance sheet total, I'll redo this. Working notes. Radha and Ramani capital. Radha Ramani capital equals to 30,000 is to 20,000, right? So their profit ratio is 3:2. Okay, 3:2. Rajini new partner. How come they give 3:2 when new partner share also not given? We don't need of that. Okay, we don't need of Rajini's share. Sacrificing ratio of Radha and Ramani is also 3:2. Okay, so goodwill to be distributed among the Radha and Rajni, Radha and Ramani in 3:2. So 3:2 means 5. 3 by 5, 2 by 5. 15,000. 5,000. Sorry. 3 by 5. 20,000 by 5 means 4. 4 into 3, 12,000. 4 into 2, 8,000. I'll tell you how. See, sacrificing ratio is 3:2 old ratio. When such a simple question has been given, rather Ramani partners and new partners ratio we don't need here because the new partner's share of capital given and his share of goodwill also given directly in the question. So what he did, based on the Radha Ramani's capital, he took the ratio of their profit sharing ratio. Radha Ramani capitals are 30,000 is to 20,000. Zeros you cancel, then their profit sharing ratio you get 3:2. Whatever the profit sharing ratio, that itself becomes the sacrificing ratio when question has been given. So simple way. So in that case, the sacrificing ratio 3:2. In that way, goodwill of Rajani distributed in the sacrificing ratio 3:2. So okay. So when you distribute it 20,000 in 3:2 ratio, you will get a Radha gets 12,000. That is 20,000 into 3 by 5, 20,000 into 2 by 5. If you do, Radha get 12,000, Ramani gets 8,000. So altogether 20,000 are withdrawn by partners. This will not change. Right? Now coming to the revaluation account. Revaluation relating to the adjustments relating to the assets and liabilities remains same. Adjuster remains same. Only the thing different distribution changes. Distribution of loss changes. Let us do this. 3,000. 3,000 in a 3:2 ratio. 3,000 in 2:3 ratio. Okay. So 6 by 5. 6,000 by 5. You do how much you'll get? 6,000 by 5 means 1,200 into 3. 3,600. 1,200 and sorry. 6,000 divided by 6,000 divided by 5. 1,200. 1200 into 3, 3600. Ramani is 2400. Right? So this is how they distributed their profits. Now, here also changes. This is 3600 and this is 2400 partners capital accounts. So when the partners capital accounts these balances changes, the total balances also partners also changes. Who Radha Ramani only. Here Rajani's capital Radha is taking 12,000 and Ramani is taking 8,000 only. Rest all same children. See, only profit sharing ratio point were involved there. So now do these totals. 30 plus 12, 42 plus 4, 46. And 20 plus 8, 28 plus 4, 32. Okay, so now from 46,000 minus 13,600. 32,400. 32,400. And Ramani, again 2,400, 12,400. 32,000 minus 12,400. 19,600. Ramani's capital. Is that getting? Still it's lost 1,000 only. Partners lost. How come it is 6,000? This is the problem with these textbooks. Loss, there is not at all possibility of getting lost 1,000 because provision for doubtful debt 6,000 and investments not appearing in the books 8,000, furniture depreciation 8,000. So debit side total 14,000, credit side total 8,000 or 6,000 it should be. Forget about this. First understand the concept, children. In the textbook, the loss is wrong, whatever they give the wrong. That's the reason don't look at the answers. Okay. Here what we are doing. So 32,400 is going to be this bank balance will not change. Whatever the amount withdrawn by both the partners is same. Round figure is same. Altogether 8,000. So now coming to this, what is 32,400? And here 19,600, whatever it is, we then still now you look at these totals. Now please do the total. Whatever the total loss we are getting 16,000. So your total 32,400 plus 19,600 plus 20,000 plus 35,000 plus 5,000. 1,12,000. Now you got. Okay. So he took capitals based on, profit sharing ratio based on capital contribution. Actually, as per the provisions of Partnership Act, It says when profit sharing ratio is not given, partners to share profits and losses on the basis of profits and losses equally. Okay. Yeah, please. Did you all? So here, now when we took this, as per the capital contribution, the ratio, you are getting balance sheet tally. See, children. I'll share you this document. Don't worry. A question, please. Question also. I'll do one thing. Copy image. I'll post the question. Question is there with you all in the study material. But not copy. Question is there in your study materials, children. Please look into that. Okay. I'll close this window. I hope you all understood. Okay, I'll share you just a moment. Wait, this document I'll share with you. So anything? Anyone has doubts? Yeah. I need to share the document to you, right? Copy paste. Share with the Zoom. I'll unmute you all. If you have any doubts, you can ask me.
Excuse me, ma'am.
Yes, ma'am.
Ma'am, once please share your screen now so that we can take these screenshots.
I'm trying to share the document itself only.
You are in which group, ma'am? Semester 3. You are in semester 3 group, ma'am.
See, you are doing with a, what do you call? You are doing,
Ma'am,
what is
I
this?
have a doubt, ma'am.
Yes.
If 2 times goodwill has given, what we have to do, ma'am?
2 times in the sense, one time in a balance sheet and one time in adjustment and new partners goodwill.
Yes, ma'am.
Yeah, the balance sheet goodwill has to be shared among the old partners in old ratio. And the new goodwill, whatever is there, that has to be distributed like a normal. When the new partners goodwill is there, that is to be given to the new partner as usual. Oh, for this document, how to wait.
In balance sheet, we have to write 2, ma'am.
In new balance sheet, only new partner share of goodwill you will get.
Okay,
In new
ma'am.
balance sheet, only new partner share of goodwill you will get. Okay, and not old one, because old one you are already what you call your goodwill you are already distributed to the partners, right? So
Yes,
you cannot
which
show
is
it.
bought by the partner that is not distributing, uh, that should not write in balance sheet, no, ma'am?
Yeah, whatever you are distributing to the partners from the question balance sheet, those are not supposed to be shown in the new balance sheet.
Excuse me, ma'am.
Yes.
Okay.
Ma'am, in
Yeah.
partners capital account, reserve fund is there, na ma'am. We have to mention the reserve fund now.
Your reserve fund we already took, right? In partner,
Yes, ma'am. So,
that
in the
will not
given
come
balance
again
sheet,
in the new balance sheet. That will not come
no, ma'am. In partners capital account, again we have to divide with the ratio of reserve fund, ma'am.
in partners capital account.
We
Reserve
have,
fund we are supposed to divide in their old ratio only. Acha, we didn't do that.
yes, ma'am.
Very good, my dear. Uh, when we are doing that only, you should have reminded.
No, ma'am. I messaged you so many times, but you didn't saw that.
Seeing this. Wait. Yeah, we'll do it. I'll do it now itself. I'm just trying to share this document with you people. Huh. Partners capital account, reserve fund, no? Right, very good. You are correct.
4,800 is the Radha's amount, ma'am.
1 second here. Used to. 4,800 is Zada.
And
4,800.
3,200 and 3,200 is Ramani's amount, ma'am.
Very good. So now the totals also will change. Total of balance sheet 46,800. 30,000, 42, 46,800. And here Ramani 28, 31,300, 200. Yeah. So in such case, 46,800 minus 13,600. 33,200. And here 31,200 minus 12,400. 18,800. What are these? 33,200, 18,800. Whatever, the total is going to be the same. Okay. Now you will get. So this is going to be your new balance sheet. So wherever new profit share means old profit sharing ratio you apply, all those places you are supposed to make the the screen is not visible.
Ma'am, please share the screen, ma'am.
So this is only the this is the question. Please take screenshots. This is the question.
Screen.
And then solution starting from here. After that, revaluation and bank account. Then partners capital account.
మ్యామ్ స్క్రీన్ చేంజ్ అవ్వలేదు.
Not change.
ఎస్ మ్యామ్, పేజ్ నెంబర్ 163 ప్రాబ్లమే ఉంది.
Oh, 1 second, wait. Now,
Sir, ma'am.
now,
Yeah, ma'am.
yeah. I'll share you this document. 1 second, give me time. It is in Word. Yes, I can share you. Say I shared you. Okay, is that fine? The previous class also there. I hope you all understood the topic. Anyone has still doubts? Do practice. You will get these kind of sums only in the exam, mostly. Take the previous question papers and practice admission of partner sums by next class. Okay, instead of textbook, previous question papers if you have, take from previous question papers and practice. Then, any more? Yeah. I hope you all understood. We can leave the meeting. Thank you, children. Thank you for being here. By next class, be prepared for the admission of a partner so that we can move on to retirement of the partner. If you are thorough enough with the admission of the partner, doing retirement of partner sums are really easy. Okay. Any more doubts? I hope no one has doubts. Thank you.